So you know Digit Insurance, right? That brand that keeps popping up on your feed with those catchy, cheeky ads. The one with Virat Kohli front and center because he's not just the brand ambassador. He and Anushka are actually investors in the company. That itself is a pretty big endorsement by itself. But here's the thing. Just because you see Virat endorsing Digit doesn't automatically mean you rush to buy their insurance. Especially not life insurance, which is something you're probably counting on to take care of your family for the next 30 to 40 years. Hi folks, I'm Shashank and you're watching Ditto Insurance. Today we're going to take a proper full deep dive into Digit Glow term plan. We'll go through exactly what this plan offers, who might want to consider it, what it's missing compared to older giants like HDFC, ICICI or even Axis Max, and what the premiums really look like when you break down the numbers. So if you've been thinking, should I try out this new shiny digital insurer for my term cover? Then this video is going to answer that for you. And hey, if all this still feels like too much to figure out on your own in the end, just book a free call with Ditto's advisors. We'll compare this plan and others for your exact age, job, health status, and make sure you're taking something that's actually right for you. The link is in the description. Alright, now heading on to who Digit really is. This is the life insurance arm of Go Digit, officially launched in June 2023 after they got their IRDAI approval. They're actually not new to insurance. They've been around since 2016 in general insurance, usually known for car, bike, health and travel policies. But life insurance is a different animal altogether. As of now, their life insurance arm is still very new, which means we don't yet have hard data on things like CSR or how many complaints they're handling per 10,000 claims. And that's a pretty important gap because unlike car insurance, which pays out in days, life insurance may only get tested 30 years later. Now, talking about the actual eligibility and structure, Digit Glow lets you start from age 18 and go up to 65 years for entry. The policy term can go up to 40 years and the sum assured starts from 25 lakh rupees and is capped at 1 crore. Now, that cap itself is a bit on the lower side. You've got premium payment options of 5, 10 or 15 years, or you can pay throughout and you can pick monthly, quarterly or half yearly or annual payments. Now, coming to the core benefits, it does what every term plan is supposed to do. Pays out a lump sum death benefit to your nominee if something happens to you during the policy term. It also has what they call a wellness benefit, which is basically access to things like doctor on call, wellness coaching, diagnostics, pharmacy delivery, mental health services, physiotherapy and home care. But there's a catch. These are largely through third-party partners. They're mostly chargeable and Digit just acts like a facilitator. So it's more like perks basket rather than something that will deeply change your insurance experience. Then you've got a few optional paid riders. There's an accidental death benefit which pays an extra 100% of your sum assured if you die due to an accident. This is honestly redundant because accidental deaths are already covered under your base life cover. Then there's an accidental total and permanent disability benefit which pays another 100% if you're totally disabled due to an accident. This is a bit more meaningful since it gives a financial cushion while you're alive. And then there's an accelerated terminal illness benefit. Well, if you're diagnosed with a condition expected to result in death within 6 months, certified by 2 independent doctors, your death benefit is paid out immediately and the policy ends. This is actually something most other insurers include by default as an inbuilt feature, while Digit keeps it as a paid add-on at minimal cost though. Now let's come to discounts because that's one place new age insurers always like to compete in. Digit offers a flat 4% online discount and a 2% discount if you're an existing customer. But it's important to see what the final premiums look like even after these cuts. When you look at the premiums for Digit Glow term plan against more established players in the market like HDFC, ICICI, Axis, Tata and Bajaj, you'll notice something pretty telling. Now, for example, a 25-year-old salaried non-smoker woman buying a 1 crore cover till age 65 pays around 11,100 annually with Digit, while HDFC comes in at around 10,200, raising to 10,700, and Axis is even lower at about 8,400 initially. ICICI and Bajaj also stay comfortably under Digit's price point. The same holds true for a 30-year-old male self-employed non-smoker looking for a 1 crore cover till age 70, with Digit charging 18,300, whereas HDFC sits at roughly 15,800 and Axis around 15,500. And even Tata hovers close to around 14,500 before climbing. So despite being a newer player with fewer inbuilt benefits and virtually no established long-term claim track record yet, Digit's premiums are actually higher across these typical profiles. That means you're paying out more for a simpler plan, which becomes hard to justify once you weigh it against mature plans from older insurers that offer richer features like critical illness add-ons, premium waiver options, or instant payout benefits, all while staying more competitively priced. So what's missing here that pushes the value down? First, there's no auto cover continuance feature. That's something many plans now include, where if you are in a tight financial situation, you can defer your premiums for up to a year without penalty, subject to a few conditions. There's also no instant claim payout on intimation. Many newer plans will give your family an immediate 1 to 3 lakh rupees within 24 hours just to handle funeral costs or travel. Not here though. The terminal illness payout, as we discussed, is a paid accelerated benefit and not built in. There's no special zero exit either, where after, say, 25 years, you could walk away and get your premiums back. Something that's showing up in a lot of competitive plans. And critically, there are no critical illness or waiver of premium riders at all. That's a huge gap for anyone wanting comprehensive income protection. So who should even consider this plan? Honestly, this is best suited for someone who just wants a basic term insurance cover from a new age digital first insurer, maybe values the wellness program perks and doesn't mind trying a newer player because of their tech friendly process. For those prioritizing stability, strong claim history and more robust features, sticking with well established players may offer greater confidence and peace of mind. When it comes to individual term plans, there simply aren't enough data points yet, no meaningful claim performance scale or track record to make a confident recommendation. For context, Digit Life collected only around 1,000 crore rupees in premiums last year, that is from group plans primarily, while the insurers we typically recommend collect over 10,000 crore rupees annually. New insurers focus on group business because it offers quick premium growth, simpler underwriting and easier distribution through corporate or lender tie-ups. It helps them scale faster, manage cash flows and build brand presence before entering the more complex and long-term individual insurance space. This gap highlights a significant difference in maturity, credibility and claims handling capability. We'll continue to track Digit Life closely as their individual portfolio develops and their offerings become more mainstream. Until then, we suggest going with established players who have consistently demonstrated long-term reliability and financial strength, especially for something as critical as term life insurance, which may need to pay out 30-40 years down the lane. And if you're still confused, just book a free call with Ditto. We'll lay out Digit next to HDFC, ICICI, Axis, Tata, Bajaj, pull up the actual premiums, show you transparently where each one shines or falls short. It's completely free and we never spam you. The link is in the description. Alright folks, that's it from me. Like this video if it helped and send it to a friend who's been considering these flashy new term plans, and I'll see you in the next one. Until then, happy insurance hunting.